The host of the following program invites your questions and comments live on air by calling 1-888-678-9597. The phone lines are open now. 1-888-678-9597.
Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs of the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro Pacific Capital and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Hi, everybody. Peter Schiff again. I am back from my 1 week out of the country. Sorry for the late start. I had inadvertently turned off my cable modem, and I didn't realize that I had done that, so I was trying to get on. I didn't know why I wasn't able to use my phone. Anyway, I finally got figured out what was wrong, and now I am on the air live, taking your calls, 888-678-9597, 888-678-9597. No, I wasn't able to do the show last Wednesday. I left town. I was out of the country. I went and spoke at an economic conference in Poland. You know, somebody sent me an email, rather nasty email, basically, hey, stupid, yelling at me for not doing the show. Basically saying, hey, I got to do this show every week. I shouldn't be leaving the country. I shouldn't do anything but this show, which is very small-minded. I like doing the show. I try to do it every Wednesday night. But, of course, there's a lot of other things going on in the world. There are a lot of other demands on my time. I can't always be here to do Wall Street Unspun on Wednesday nights. I can't turn down every speaking request that I get because it conflicts with Wall Street Unspun. I generally try to arrange my schedule so that I have Wednesday nights at 8 to 9 free. But I can't always do it that way. I mean, sometimes things are going to come up, and I have to sacrifice the show to do something that maybe, can give me a greater reach, can help me spread my message. And I always hope that the shows are good in my absence. We don't just leave them blank. We have other brokers do the shows, and in generally I get good feedback when other people have hosted the show for me. But I know some people are upset when they go to listen and I'm not there, but, just nothing I can do. I do it most of the time. But, it was very interesting speaking in Poland, especially given the reaction that I got to a lot of the things that I said. In fact, I spoke at the closing ceremony, and it was the 19th anniversary of this conference, and I was on the main panel that ended the event. And of the people who were on the podium with me, I'm the only one who actually spoke where the audience, broke out in spontaneous applause on several occasions. I was part of a panel. But where they applauded was when I was talking, negatively about the government's role in the economic crisis, when I talked about the Federal Reserve, when I talked about what the government was doing with the stimulus and with the bailouts. And that's when I got applause. And when I defended capitalism, when I defended the free markets, I got applause. And I was the only person really doing that. I mean, again, the person who was not blaming the economic crisis on some failure of, regulators to do their jobs, that we just didn't have enough regulation and we had greedy capitalism run amok. I was talking about the reality of what happened, and I was getting a lot of applause. And remember that 20 years ago, this was a communist country. Poland was communist. And here you have a lot of Poles understand freedom and capitalism. And a lot of people came up and talked to me, and people who were reading, von Mises and, real Austrian economists, and people who really believe in these principles and want their government, to be even smaller and to continue with free market reforms. It was interesting. I spoke to a woman at the conference who was helping to organize it, and she was in the car driving me to the train station. And, we were talking about taxes, and, they had to get, they were paying me a fee to speak there, and they had to, clear it so that I would pay no Polish taxes, so that I would just be paying U.S. income taxes. And when I told her how high the income taxes were in this country, she really couldn't believe it. She was kind of shocked that the taxes in America were so much higher than what they were in Poland. And, this is not where we want to be. We don't want to be the high tax, high regulation, big government economy. Because, there's a lot going on outside the United States. A lot's going on in Europe. A lot's going on in Asia. And if we're just going to be alone in this march, deeper, down the road to serfdom, if we're going to keep on piling on more government while the rest of the world is getting rid of their government, this is going to be one enormous hole that we are in the process of digging for ourselves. Also, what I got, I finally got the hard copy of Crash Proof 2.0 last week. I had it with me on the plane. I was looking through it. It really came out well. The cover, I think the cover looks really good. I think it's a much sharper cover, a much more marketable cover than was the first book. But the revisions came out really well. I think there's a lot of worthwhile information in that book. And so people who read Crash Proof should still, pick up a copy of Crash Proof 2.0, just to at least to read all the new material that I added to the original book. And of course, if you haven't read the original book for a while, it makes sense to read it again. Even I get something. I wrote the book, and I reread it, and I do get enjoyment out of reading it. So if it was a year or two ago, and before you even read the original, it probably makes sense to read the whole thing again. But you can order it. I know they have it on Amazon. I think the official date is September 22nd. Who knows? They might have a few copies before then. One of the most interesting things about the book is, the chapter on rethinking your stock portfolio, which I think was chapter 8 in the book. I wrote that chapter in March of 2008. And coincidentally, as I was writing that chapter, the stock markets were basically at their lows. The U.S. market bottomed out in March. The foreign markets bottomed out in October the previous year. But by March, they were very close to those lows. It wasn't like they were that much higher. But, of course, now that the book is coming out 2 weeks from now, the dollar index is almost back at an all-time record low. When I was writing that chapter, the dollar index was around 90. It was around 89, close to 90. It's now at 76. 76. It's almost all the way back down to its record lows. You've got the euro now trading above 147. You've got the Japanese yen. The dollar now is worth less than 90 Japanese yen. This is the lowest. In fact, this is lower than the dollar had been, I think, even prior to my book coming out. I don't think the dollar had been this low since the mid-1990s against the Japanese yen. You've got other currencies. The New Zealand dollar, when I wrote my chapter on buying foreign stocks, the New Zealand dollar was 50 cents. It's 70 cents, 71 cents. And, of course, a lot of these foreign stocks have doubled and tripled from where they were when I wrote that chapter. So what I was able to do, very late, is I slipped in an author's note just letting people know, hey, we don't have the fire sale going on. When I wrote the book, I didn't realize how quickly the stocks would come back up. I knew it was possible. In fact, if you go back and you listen to any of the Wall Street Unspuns that I recorded in late 2008, early 2009, when the dollar was at its highs and when foreign stocks had dropped, I was assuring everybody that, look, this was just a temporary situation. It didn't make any sense what was happening long-term from a fundamental perspective, but that we had to ride it out, that it was a buying opportunity. And, of course, so far, that's what it looks like it is. There are so many stocks that even when you don't even count the currencies, have doubled and tripled and quadrupled since earlier this year. There are some stocks that have done better. Now, not every stock. There are still some stocks that I bought that have not rallied back too much. They're few and far between. Maybe, so there's, most of the stocks have gone up dramatically, but not every single stock has. But of course, when I was writing that chapter, I didn't realize at the time how much they would rally in such a short period of time. I mean, I knew it was possible, and even when you're reading the book, you can see that, because I say, look, there's these great bargains, but they might not be there by the time you're reading this, and I'm hoping that my books are out there and selling for a long time, so there are going to be people that are going to buy this book. Maybe they buy it a year from now, 2 years from now, 3 years from now. So, a lot of things may have changed dramatically by the time people who are reading the book, especially when people might be reading it years after publication. But anyway, it looks good. I'm very happy with the way it turned out. I'm very happy with the redesigned cover, and so hopefully this book will sell very well. The first book I know has sold better than 175,000 copies of Crash Proof 1, but it never made it on the New York Times bestseller list. So I don't know what it takes to do that. I know I've sold a lot of copies. Maybe if I had sold them all, in a shorter period of time, it would have made it. But hopefully, if enough people buy the book this time around, maybe I can get onto the New York Times bestseller list. What I'd like to do this time is get a review. That always bothered me. The original Crash Proof was never reviewed. Nobody reviewed it. I mean, Kiplinger selected it as one of the top 5 investment books of 2007, and Amazon picked it as one of the top 10, but they still didn't review it. And of course, nobody actually reviewed the book, really. None of the newspapers that review books, even though the book accurately predicted pretty much most of what happened in 2008 and was one of the only books that actually did do that. You would have thought it would at least have merited a review or two, but it didn't. Hopefully, we might get a review from Crash Proof 2.0, but I won't hold my breath on that. But maybe if we can get it on the New York Times bestseller list, maybe that will prompt somebody to review it. Although I'm sure all the other books that are on the New York Times bestseller list did get reviewed by somebody. Anyway, on this weekend, on Saturday, I'm speaking at an event in Philadelphia. I think it's more of a political type rally. Campaign for Liberty, I think, is putting that on. But I'll be there, so anybody who happens in the Philadelphia, or I think it might be in Valley Forge, I forget exactly where it is. I got to check my calendar, but I know I'm going to be there on Saturday. Anyway, while I was away, the markets continue to move in my direction. I wrote a pretty good article for my newsletter, which unfortunately didn't go out in time. It was supposed to go out a week and a half ago, but all the things that we're doing now, compliance-wise, all the different reviews and procedures that, it just takes forever now for me to mail anything out. So hopefully the newsletter will get out sometime this week. But it was supposed to go out a week and a half ago or so. So if you're waiting for an issue, hopefully it'll be there. But the markets, continue to move in the direction I've been forecasting. The dollar has been making new lows. I felt that a little bit when I was, out of the country. Certainly, it's a lot more expensive than I remember it being in that part of the world. But you can feel the weak dollar. But the dollar made new lows while I was away. Gold, I'm looking at the spot price of gold. GLD today closed at $9.99, up $10. I think this is the first time that this year that GLD had actually ticked above 1,000. So I know the futures markets, which a lot of people talk about, broke through 1,000 a few days ago. But this is the first time that we've seen the spot market, as judged by the GLD, above 1,000. Look at silver prices. Silver price is above $17. Now we need about $3 to get back up to 20. Silver prices bottomed out just around $10 an ounce earlier in the year. Now, the dollar is particularly weak against the Japanese yen. I mean, if you look at that chart against the Japanese yen and look at some comments that were in the paper today by the guy who's likely to be the new prime minister of Japan, very, very negative comments for the dollar. Basically, the guy said that they're not going to intervene, they don't want to weaken the yen, that they think that's counterproductive, that they don't want to, undermine the purchasing power of their own citizens, that they need to have a stronger domestic economy, and that a stronger yen is good for that, and they're not going to simply try to prop up the dollar to help their exporters. I mean, this is great stuff. I mean, this is stuff that they should be saying, right? This is all very good stuff for Japan, for the Japanese economy, that now Japan has a strong yen policy, that you actually have a leader of Japan saying that a strong yen is in the Japanese interest. That's what he said. He said, we want a strong currency. And you know what? They're going to get a strong currency because they deserve one. But the key is they're not going to be there intervening to prop up the U.S. dollar. And so you no longer have this yen carry trade. Who's going to want to do the yen carry trade? The new carry currency, the new funding currency is the U.S. dollar. It's the U.S. dollar carry trade that is going on. And it's the exact opposite of what everybody was doing earlier this year, late last year. Everybody was selling stuff to buy dollars. Well, now they're doing exactly what I said they were going to do. They're rushing to sell their dollars and buy stuff. And, and for people who still haven't figured that out, there's still a lot of people who are, holding on to their precious dollars, thinking that that's the way to ride this thing out. They bought into that head fake in 2008. They really made a bad bet, a foolish bet that's going to come back and bite them. But you can see what's going on right now. And it's not just, the metals that are going up and foreign currencies that are going up. Look at the stock market. It just is amazing at what's going on outside the United States, where I look at stocks that are up 5 and 10% a day every day. I mean, forget about what's going on in the U.S. I mean, you can barely tell that the U.S. stock market is going up. I mean, the Dow was up another 100 points today. But, I mean, even when you put it in real terms, I mean, you always have to factor in how much the dollar went down. And in many cases, the Dow was up by less than the dollar went down, meaning that, you're not even breaking even. But when you're looking at what's going on in foreign countries and you're looking at stock after stock that's up, and then in addition to the gains, you can factor in what's happening on the foreign currency exchange side of it to augment those gains. And so people who are still looking at what happened in late 2008, thinking that they need to be in dollars, I don't know what it's going to take for them to understand the truth. In my newsletter article, I talked about climbing the wall of worry, where you've got, there are a number of people out there that understand that there are these serious problems, but they're reluctant to do anything. They're reluctant to buy gold. They're reluctant to buy commodities. They're reluctant to invest abroad because they think the way all these problems are going to resolve themselves is with a huge rise in the U.S. dollar, which, intuitively, it never made any sense for somebody who thinks that there are serious problems in the United States, that the resolution of those problems should be a big increase in the value of the dollar. It's like, why should we be rewarded with a stronger currency? If there's so many problems in the American economy, why would the result of all those problems be that Americans get richer, that the value of Americans' savings goes up, that the value of our wages goes up? It doesn't make sense. It's like saying, we've done a lousy job, and you're a student, you do a lousy job, and so you're going to get rewarded with an A. Your exchange rate is almost like your grade on how well your economy is doing. If your economy is doing well, if you're productive, if you're saving, if you're growing, your currency goes up. You get an A. If your economy is producing losses, if you're not saving, if your governments are running deficits, if you're running trade deficits, then you get an F. Your currency goes down. I just don't see how we can have all these problems and walk away with a strong currency. It just doesn't happen that way. You end up with a weak currency, and that's what the markets are showing now. And in Barack Obama's speech, and I don't want to hurry up and get to your calls, I didn't even hear the speech when I was out of the country, but I read excerpts of it. And, Barack Obama is basically saying the economy is getting back to normal now. That's a good thing. The crisis is over. The stimulus is working. My economic plan is working, but we don't want to get complacent. We have more work to do. Of course, he wants to pass his health care bill and all that. The problem is we are getting back to normal. That's the problem. Normal is the problem. Because what normal is, the normal that Barack Obama is describing, is the normal economy where we spend money we don't have, where we go deeper into debt, where we buy stuff, where we have retail sales. We go out and buy cars with borrowed money. We go out and buy imported products with borrowed money. The government gets bigger. We expand government. We go deeper into debt. That's the normal that Barack Obama is excited that we've gone back to. We don't want to go back to that normal. We need to abandon that. That is why the country is in so much trouble. That's why we had the crisis of 2008, because of that normal. And that's why the crisis of 2010 or 2011, whenever it's going to hit, is going to be so much worse than what we had in 2008, because we will not let the markets redefine what normal is, because normal is supposed to be a society that saves, a society that produces. That's normal. We need to get back to a real normal, not the phony bubble economy that is the source of all of our problems. Also, let me make a quick note again. I'm going to be on MSNBC Morning Joe tomorrow at 8:15 a.m. Eastern Time to announce once and for all my decision on whether or not to run for the U.S. Senate in Connecticut. And again, if you want to make a contribution to that potential campaign, you do so at www.schiffforsenate.com. Also, one other announcement I've mentioned before, I'm in the process of setting up a new company to sell physical precious metals, Euro-Pacific Precious Metals. Hopefully we'll be able to launch in October. The reason I want to mention it now is I am looking for resumes for people who potentially want to be sales reps at that new company, people who want to help me, that want to, be on the phones with potential customers of Euro-Pacific Capital Precious Metals to help them buy physical gold and silver. So if anybody is in the precious metals business now, if anybody has, experience selling bullion and who would like to potentially work at Euro-Pacific Precious Metals, the home office will be in Westport, Connecticut. And that's where I'm initially looking to hire the first, maybe up to 5 or 10 salesmen to work with me at the precious metals business. Definitely try to get in touch with the company, send us a resume, give us a phone call if you know other people who are working in that industry. I expect, hopefully, within a very short period of time, to be one of the biggest and ultimately the biggest precious metals dealer in the United States. Everybody that listens to this show knows right now we've been selling Perth Mint certificates, which we will continue to do at Euro-Pacific Capital and probably at Euro-Pacific Precious Metals as well. That is a great way to buy gold and silver and have it stored outside the country. But I've also always recommended that people own physical coins that they maintain possession of inside the country. I've just always referred people to outside vendors to do that. Ultimately, or relatively soon, I'll be able to supply my clients with physical coins at a competitive price and in a very timely way. Anyway, let me quickly go to the calls. First up is Benjamin calling from Chicago.
Yeah, I had a question. I know you're really bearish on the housing market, but I'm wondering, let's say interest rates are going up and the price of housing is going down. Would it be better to buy now or to wait for that to happen and then buy?
Well, look, I think personally the best time to buy a house is when interest rates are as high as they're going to be. Because that means the price is going to be as low as it's going to be. The higher the price, the higher the interest rate, the lower the price of the house. The lower the interest rate, the higher the price of the house. Houses almost work like bonds, right? When interest rates are high, bonds go down because people buy houses with credit. And so when interest rates go up, you can't afford to pay as much for houses. So ideally, you want to wait for interest rates to be very high and then come in and pay cash for a house. That would be the way to go. That's what I'm personally doing. I'm renting my house still here in Weston, Connecticut, and I'm keeping the money. Of course, all the money that I earn, that I don't spend on my mortgage payment or my property taxes or whatever else, I invest that. I buy foreign stocks, I buy precious metals, I buy foreign currencies. That's where I'm keeping my potential house buying money. Because I'm convinced that when the U.S. real estate market bottoms, the dollar will also be very low. And so I think you'll be able to buy a much bigger house if you've got gold to pay for it, or if you've got euros, or if you've got, any foreign assets. And that's how I'm playing it personally.
Two things. One, what if you don't have enough gold, they would actually buy the full price of the house? And two, But you have to pay capital gains on the gold, whereas if you buy
right, I mean
now,
you'll have enough for the down payment. Yeah, if you don't have enough to buy, but it might look gold. Let's say gold goes to $5,000 an ounce. That's still 5 times what it is now. So if somebody puts $20,000 into physical gold, if that happens, they have $100,000. At the same time, the housing prices go down. You can make a decent down payment. On a house, or who knows, you might be able to, I don't know how cheap houses are going to get, and it's also possible that we can have hyperinflation, and gold can go to a lot higher than $5,000 an ounce.
Okay. And so there's no chance you think the housing is going back up anytime soon?
Well, I mean, it's going to be they're going to have to create a lot of inflation to get home prices to go up. Now, they very well might do that, but real home prices have no chance of rising. So if you want to think of what's going to happen to the price of a house in terms of an ounce of gold, a barrel of oil, a bushel of wheat, housing prices are going to go way down. If you want to compare what's going to happen to U.S. houses versus, a stock you can own in Hong Kong or anything else. I mean, compared to anything else, I would rather own just about anything else. I mean, the only thing I don't want to own would be U.S. bonds, like Treasury bonds or, municipal bonds. Because there, you might actually lose more money. But the problem with the U.S. economy is in such bad shape, and we have such a glut of houses, that the thing is the government can create a lot of inflation, but housing prices still won't rise. Now, they won't fall as much as they would have. That's the key. If the government hadn't been creating all this inflation, home prices would be falling, which would ultimately be a good thing for the economy. But unfortunately, we're not going to get that good thing because the government is not going to allow that good thing to happen.
Okay. Well, thank you very much.
Thank you. And again, the reason I say that falling home prices are a good thing is there's a lot of people who want to buy houses. And a lower price is a good thing for a buyer to be able to buy a house. And, of course, the market is still overpriced. And so it's a good thing to get markets to be real, to have prices that reflect the actual market, as opposed to a phony subsidized market and all the distortions and malinvestments that false prices lead to. Anyway, next call is Marty in Pasadena.
Peter, thanks for your time. Peter, do you think silver will outperform gold by the end of the year?
Well, I mean, it has been recently, right? I mean, if you look at the movement from the lows now, silver's gone from 10 to 17. That's a 70% increase. So it has already. And I think that if I'm right on what's going to happen to precious metals, that silver will outperform. I think there's no doubt history has shown that. Of course, if I'm wrong about precious metals, silver may underperform. So, it's I think if you're going to bet on precious metals, you've got more upside and more downside in silver than you do in gold.
Okay, silver, okay. How high do you think it'll close by the end of the year, Peter?
I don't know. There's no way to know, where it's going to close. I mean, I certainly think that it can retest that $20 level. I mean, whether it's going to close above it or not, I don't know. But, if it doesn't close above 20 in 2009, it'll be above 20 in 2010. I'm pretty convinced of that. As long as we continue on our current monetary and fiscal policy, I don't see how gold and silver can do anything but go up. Now, anything can happen in the short run. I mean, we all know what happened in 2008, right? Gold went down, silver went down, the dollar went up. So obviously it can happen again. I tend to think the odds are we won't have anything nearly that dramatic, especially since so many people are looking for it. So many people now think that if the U.S. economy rolls over, if the U.S. stock market rolls over, that exactly what happened in 2008 is going to happen again. I doubt it. I tend to doubt it. But, of course, I have to hold out the possibility that anything can happen. I don't want people to think that if they buy foreign stocks or they buy precious metals, that there's no way that they can lose, or that there's no way that there could be some short-term volatility. That is certainly the possibility. But for my money, personally, I would much rather own foreign assets, precious metals, commodities, and run the risk that they go down than own U.S. dollars and run the risk that it collapses.
Now, what do you think as far as investing in like a silver mining company?
I got a lot of money in silver mining companies. I think my biggest position personally in a silver stock was up 16% on the day. I mean, I own a lot of silver companies. I own a lot of gold companies. I mean, those stocks were down. I had 70% losses. In those stocks in just a few short months in 2008. Most of those stocks now have made 52-week highs in 2009. It's been a very, very bumpy ride, but I don't think we're anywhere near over. Right? I mean, my personal opinion is that a lot of the gold stocks could be 10 to 100 times their current prices in the future. So there's obviously a lot of potential if we get the kind of runaway inflation that I think is coming. And that's why I've been buying personally so many of these, mining stocks, is because I really believe that that's the way it's going to end. One of the reasons, or one of the main reasons that I'm thinking about running for the U.S. Senate is to try to prevent the worst case scenario from actually coming true, which is the hyperinflation, which is something that I really hope we can avoid. But unfortunately, based on how the politicians have been, what they've been doing and what they're inclined to do, that worst case scenario is looking more and more likely every day. What were you saying?
If they increase the debt limit, do you think that'll just kind of send the prices through the moon on those precious metals?
Well, they always increase the debt limit. I mean, they might as well not even have a debt limit. I mean, every time we get near it, they raise it. It's all a show. There is no debt limit. They're just going to.
In October, they're going to, what is it, the 12 trillion one?
Yeah, but they raise it. They always raise it. They call it a debt ceiling, but I mean, what kind of? The ceiling goes to the sky. There is no ceiling because whenever they get near the ceiling, they vote to raise it. We shouldn't even have a debt limit. The whole thing is a farce. Of course, well, I'd wish that our foreign creditors would at least have stop lending our government so much money. Because at least if they stopped lending, maybe we'd stop borrowing. That's the real problem. I mean, if they could just come to their senses and realize they're never going to get any of this money back.
Do you think that's why China is telling all their citizens to, like you said, to invest in precious metals?
Yeah, look, they have to understand. I mean, the world. It takes two to tango. We didn't create this problem on our own. We borrowed too much, but the world loaned us too much, and they're just as complacent as we are. They helped us dig ourselves into this hole, and without their help, we never could have done it. Anyway, let me pick up the next caller.
Thanks, Peter.
All right, is it in Lauren in Portland, Oregon? Is that it?
That's correct. Yes, thank you. My question is in equities, U.S. equities, gold, and the U.S. dollar index. I see the U.S. equities are getting pretty close to a 50% retracement of their highs a couple years ago. And I heard you talk to an earlier caller saying that you didn't think that maybe it would stop gold from going up if equities started selling off. Do you see gold going up even if equities do start selling off?
Well, I think so. I mean, that was the topic of the article that got held up in my newsletter. But, yeah, I mean, I think there are a lot of people that think that, if the U.S. stock market sells off, that gold will sell off too. But, we got that big 200-point drop a couple weeks ago, and gold rallied. And I thought that was significant, that we didn't see a weakness in gold like a lot of people would have thought. I think that strength in the dollar in late 2008, early 2009, that was an abnormality. It wasn't something that you should rewrite how you think correlations would work. I mean, normally gold is countercyclical to the stock market. Normally you would expect gold to do well when stocks are going down. It was only during that period of time that you had all these assets moving in tandem with one another. And you have a lot of people jumping to conclusions that the rules have been rewritten now and that's the way it's always going to be. And I don't think that's the case. I just think that the people who are rewriting these rule books just never really understood what was going on in the first place. They still don't understand the root causes of these problems and how they're going to resolve themselves. So I think ultimately it's, the dollar is going to fall and U.S. stocks are going to fall and U.S. bonds are going to fall in tandem. But I do think that foreign markets, commodities, gold will decouple from what's happening in the United States.
Okay.
And I certainly I certainly expect gold, for example, and the dollar to decouple more than foreign stocks. So I think that if we really do get a big sell-off in U.S. stocks, I mean a big sell-off, I think that foreign stocks should also go down. But I don't think they'll go down as much as the U.S. market. And I think what will happen is that the dollar will be falling and not rising the way it did in 2008. So even if, let's say, foreign stocks drop by 20%, but the dollar drops by 25% at the same time period, from an American perspective, it'll look like the stocks are going up because they'll actually have more dollars because the dollar was weaker than were the foreign stocks. That's the opposite of what happened in 2008, where foreign stocks went down maybe 30%, but the dollar went down. I mean, the foreign currencies went down by 30%, which meant those stocks were down 50, 60%. I don't think that's going to happen again the way it did. And I think, the fact that a lot of people got fooled by that, I think got a lot of people invested the wrong way now. They're not really positioned for the real outcome. They got fooled by the market. I mean, fortunately, the overwhelming majority of my clients did not. I mean, certainly we had a lot of clients that were down in 2008, but we had very few clients that cashed in. And we really didn't have any clients that were on leverage, that were we had to give them a call and say, hey, you got a margin call. That wasn't the case. Our clients who got out pretty much took themselves out of the game. They weren't forced out, but there were very few of them, certainly in percentage to the total. And of course, there were a lot of clients who really did the right thing, who took advantage of the fact that the markets went down and they bought more. And those clients are obviously extremely happy. Anyone who bought starting from October, November last year through any time, of course, in 2009, people are very happy about the fact that the market pulled back. I mean, I think personally I'm in much better shape, even though my portfolio was hit very hard in 2008. I was down, I'm sure I was down at least 50% minimum on my holdings, but I'm in better shape now. I've recouped those losses, but I've also was able to increase my holdings in key stocks as a result of the fact that the market went down.
Yeah, I'm just real baffled these equities have gone up as high as they have here, and I can't see them going up a whole lot higher here with.
Well, remember, a lot of it is because they went down so much. A lot of the foreign stocks really should not have got down to the extent that they did. So you had an overreaction on the downside, and now the rally looks there's this spectacular rally. But the truth is, it's not if you put it into context with the even more spectacular drop. But I also think one of the other reasons that stocks are becoming more popular is people are starting to understand that cash is going to lose value. And it's not just the U.S. dollar. We're not the only central bank that's got interest rates at practically zero. Interest rates are too low all over the world. And so as a result of that, people are realizing they have to own real things. They have to own tangible assets, and that's what stocks are. Anyway, thanks for the call.
Yeah, thank you.
Let me quick out of line. I got somebody calling from Kuala Lumpur, Malaysia, so he doesn't have to wait too long. How you doing, Ron?
Hi, good morning. This is Peter Schiff, right?
Yes, how are you? What can I do for you?
Hi, yeah. I'm actually a big fan. I wish I've heard of you earlier, actually. I think you're doing a pretty good job. Yeah. I just wanted to ask something. I'm quite a big fan. I've been listening to you and seeing all these YouTube videos. I heard you ever since I saw this Peter Schiff was right video. So, what I wanted to ask is I read this book called the book that you recommended. It's called the Henry Hazlitt book, Economics in One Lesson. So basically, what when I read what it says, price controls are a bad thing. Now, hello?
Yeah, can you get to your question? I'm having a hard time hearing you.
All right. Okay, what I want to know is, why is price control a bad thing? Now, I'll give an example. During the last, few months with all the swine flu outbreak here in Malaysia, what happened was the prices of face masks suddenly shot up a lot. And what a lot of people are saying is, the people, the companies that are trying to make face masks are profiteering They're purposely raising the price, even though it had nothing to do with the production cost of the mask itself. So what the government did was they stepped in and said, okay, now we're going to fix the price. It's going to be this many dollars for the face mask, and it can never go higher than that. So according to the book itself, like price controls are bad things. So I just want to know your opinions about profiteering and what companies do.
Okay. Let me answer that question, and then maybe you can listen off the air. In general, look, governments are always trying to accuse people of profiteering. When there's a situation and they raise their prices, but if you take the profits out of profiteering, then you're not going to have the products that people need so desperately in these times. I mean, for example, let's say that there was a shortage of water. There wasn't any water, and so people all of a sudden people were able to sell water for a lot of money. Well, if you couldn't do that, well then the water wouldn't be on the market, and people would thirst. I mean, that's what brings a supply to market, is the potential to make a higher profit. If those profit potentials aren't there, then the product isn't there. If there is a vaccine that a lot of people need, the price is going to go up. If and the market is going to be able to ration the product. If you set a price, assuming that the product is even available at that artificially low price, who's going to get it? You're going to have long lines, or you're going to have a lottery, or the government's going to have to pick. When you allow the market to function, then the person who pays the most gets the product. People might think, well, that's not fair. Well, is it fair? If we have some other arbitrary, whether whoever has the most political connections gets the product. I mean, that's how it worked. As I said, I just came back. I was in Poland. And, I talked to people there. They used to have all these stores in Poland where all the people in the Communist Party could shop, because that's the only place you can get stuff. If you weren't in the Communist Party, if you weren't a high-ranking official, you couldn't get anything. Everybody was equally poor except the politicians who got all the money. But they got money because of their connections, not because of what they produced or what they did. But you never want the government to set prices. It creates shortages, it creates surpluses, it distorts markets, and it discourages. I remember I think there's a story, I forget about it. There was a castle, I think, that was under siege, and so people were sneaking food in, and when they snuck the food in, they would charge a high price for the food. Of course, it was very risky to sneak food because you risked death if you got caught. And so, because the enemies were blockading this castle, but people would sneak food in. And so maybe the king or in the castle says, okay, this is terrible. We don't want anybody profiteering. Anybody caught selling food at an outrageous price will be put to death or whatever. So they want to stop the profiteering. And, of course, now that there's no big profits, nobody wants to risk their life sneaking food into the castle anymore, so the food stops and everybody starves and they end up having to surrender. And those are the problems with price controls. Anyway, let me quickly have two more callers on hold. Roxanne in Denver.
Hi, Peter.
Yes.
Oh, I could barely hear you. Okay, I just wanted to add a quick comment. Thank you so much. You saved our 401k last year. I watched Fast Money and you were on, and I don't know why I believed you, but something about the dollar and the Zimbabwe dollar shook me up. So we put some stops on our stocks, and it just saved everything, which, to us was a lot of money. So I just want to thank you for that. I read both your books, and I was just wondering, I'm kind of freaked out about everything now, and if maybe we're safe as long as we're invested in gold.
Well, yeah. Well, if you're in gold, I think you got out of U.S. stocks and then you bought gold, or did you open up?
Yeah, we bought mining stocks. We bought gold, silver. So we're doing actually really well. My husband doesn't know really what to make of it because I don't know anything about this stuff, and I'm just following your advice and doing really well. Your Fortune article, China Petroleum is going crazy. So I guess I'm really interested in everything now, and I'm just wondering, as long as I stick with the basics,
Hello?
Oh, I'm sorry. It was call waiting.
Yeah.
As long as they stick with gold and the mining companies, we should probably be okay.
Well, I don't know, what else your portfolio looks like. I mean, if you're working with a Euro Pacific Capital broker or not, or you're just kind of going it on your own based on some of the things that I've said.
Right, that's basically it. I want to do
Yeah.
Euro Pacific, but I mean, we only have like 100,000, so I really thought it had to be a little bit more than that if we wanted to invest with Euro
No,
Pacific.
I mean, no, you don't. You can invest with 100,000. You can invest with less than that. There are plenty of clients who start off with less than 100,000, and we can still help them. So that's what I would suggest you do: is you call up, and talk to a broker at 800-727-7922, and see what other types of stocks that we might be able to recommend to you to help broaden out your approach.
Right.
Get a little bit more.
And you can roll it over.
diversification.
I mean, now that we're out of we were with Chrysler, and now we've moved out of Michigan, so you can roll over into Euro Pacific. I mean, there's not a problem doing that.
I mean, talking about you're investing in an IRA. Is that what this is?
It was a 401k. It was through Merrill Lynch. Can you just roll it over to Euro Pacific?
Yeah, I mean, it's obvious. It's now an IRA. Yes, you can
Okay.
roll it over. You can move the account and without touching the investments if you want, and then we can help you, going forward with other, other investments that you can make in there. Yeah, so you're not just mining stocks or,
Right.
I mean, you can be. It just depends on how much risk you want to take and, what other considerations that you have. I mean, personally, I've got a lot of my money in mining stocks, more so than most of my clients, but I also have a lot of money in non-mining stocks. I have a lot of just basic, boring, high dividend paying foreign stocks that I don't want to have everything in just the mining stocks.
Right, okay. Well, thanks again for all the advice. You're really helping us out, so keep up the good work.
Sure thing. The last caller from today is going to be, is it Marco from Los Angeles, California?
Yeah, how you doing? Peter, I just wanted to get two quick point of views from you in regards, first of all, to the Federal Reserve. Being that you were running for Senate, if indeed you would be against the audit that Ron Paul was proposing. And second question would be, if indeed you agree with the Pope's new encyclical of Charity and Truth, asking for a new world financial order and the stop to globalization.
Yeah, well, I mean, I'm in favor of the audit. I mean, I think that the Fed should be audited, especially considering what they've been doing. I think the objections from the Fed that it compromises their independence are laughable, because there is no independence anymore. The Federal Reserve is an arm of the government. I mean, they do the government's bidding. But given what they're doing, as long as they're going to act like an arm of the government, then they might as well be held accountable. They can't operate in secret. If they really were acting independently, then I might see their point. But they're not doing that. And of course, given the securities that they've been purchasing, what's been happening to its balance sheet, I think we need to know everything that's going on at that institution.
Gotcha. Definitely. Now, in regards to the Pope's new encyclical, it's called Charity and Truth. He's asking for a stop to globalization and asking for a new world financial order. And recently, the Russian President Medvedev, he actually said today in the New York Times that he's actually calling for a destruction of his primitive economy in Russia. And at the G8 in July, he showcased the new world currency that he would like to have go in place. I mean, do you see any correlation here, and do you agree with a world currency and stop to globalization?
No, well, I don't think we need a world currency. We already have a world money that works very well, and that's gold. I mean, gold has worked for thousands of years. People recognize it as money all around the world, and I think gold works. And I don't want to have any kind of global currency. I don't know what central bank would be issuing it, and but we don't want to. We want to get away from governments creating money at will. We want real money. We don't want make-believe money. That's how we got into this mess. If we were on a gold standard,
I would definitely not want to see another fiat currency being created.
Yeah. Anyway, well, thanks for the call. I know I'm running out of time here. I'm trying to figure out if we're still ending at 8. For some reason, I keep emailing the back and they won't. Oh, now I know. Okay, yeah. So even though we started late, we're still ending on time. So we're going to wrap it up here. Anyway, look, thanks everybody for listening. As far as I know, I will be back again next Wednesday to do another live episode. Also, on the video blogs, keep watching for my video blogs. I did one out of Poland. I meant to do a few more, but unfortunately I left my laptop computer in the car that took me to the train station, so I wasn't able to get it until I went back through Krakow on the way home from Prague. So I wasn't able to do any more video blogs, but I'll probably get one up again tomorrow. But remember to watch those. Don't forget to talk to a Euro Pacific Capital broker about any of the investment strategies. 800-727-7922. Always remember, there's risks in everything you do. There's risks in commodities. There's risks in foreign stocks. There's risks in U.S. dollars. There's risks in staying in bank. There's risks in putting your dollar bills under your mattress. Everybody needs to consider all the various risks and decide for themselves what they want to do, how best to protect their wealth, more importantly, the purchasing power of their wealth. Always remember, it's not how many dollars you have, but what those dollars will buy. I'm convinced, based on what we're doing, that if you have a lot of dollars in a few years, you're not going to be able to buy very much. And a lot of people are not going to be happy about that. They're going to think they did it right. They're going to think they played it safe, and they're going to wake up and see that the rug has been pulled out from under them. So if you understand what's going on, I don't know how much more time there is to really get your ducks in a row. But anyway, we're there to help you at 800-727-7922 at Euro Pacific Capital. And don't forget to order your copy of Crash Proof 2.0, How to Profit from the Economic Collapse. I know you can order it now on Amazon, I think on Barnes & Noble, and it should be available in the bookstores within another 2 weeks. Anyway, that's it for today. This, again, is Peter Schiff at Euro Pacific Capital. You've been listening to Wall Street Unspun Midweek Market Update. Thanks, everybody.